Let's quickly switch focus. Kalpataru Projects, on the back of earnings, the company's profits fell 25% while margins also took a hit, resulting in that profit fall. We spoke to the director, Amit, on the quarter gone by and the future growth outlook. Listen into that.
This quarter was an exceptional quarter in terms of a very protracted, long election, because of which most of the government projects slowed down. There was a severe heat wave in addition to that, and a lot of the labor just was not available. This was faced by industry at large. Having said that, July already, more strength has started to come back, and we believe by August we should be on full strength. And so third, fourth quarter, we expect for revenue to bump up, and so we'll be able to maintain that 20% at the end of the year as our revenue growth compared to last year.
Okay, so quarter 3 and quarter 4, definitely the quarters to watch out for going forward. Now, what's interesting here is the key metric which you use, that is the PBT guidance, which is about 4.5 to 5%, while your EBITDA margin guidance is about 8.5 to 9%. I want to understand, there was one point which we saw in the presentation about the new orders secured. They have better profitability going forward. So barring FY25 onwards, if we consider the next 1 to 2 years outlook, how do we see this inching upwards?
So, even now, if you see our Q1 standalone result, our PBT is at 4.4%, in spite of a little bit of lesser revenue than guided for Q1 because of all the factors that we just discussed. I think the last 2-3 years in our energy sector, the transmission saw a dip, but for the last 6-8 months, there is a huge inflow of orders in transmission. The margins are getting better. And I think, as you mentioned, our expectation is that, as we said, we'll be in 4.5 to 5%, but going from 26 onwards, I think we should be at the upper band of that guidance and hopefully get to 5% and beyond in FY26, given that the inflow of orders is at better margins than they were the last few years.
And just a follow-up on that, what about the EBITDA margins? Can we see them going back to the 11% range?
So, we've said that because we are a diversified EPC contractor across so many sectors, right? Some have very large capex. So, for example, in urban infra, when you buy tunnel boring machines and very large HDDs, etc., your capex is very high in 1 year, depending on the kind of projects that you win. I think the right way to look at a diversified EPC business, whilst we try and get to a bit of 9 to 10% in the quarters to come next year. But I think if you look at from a balance sheet strength perspective, if my net working capital days are below 100 and my interest cost as a percentage of my revenue is maintained at 2% thereabouts, and my PBT is in the range of 4.5-5% and hopefully get to 5% and a little more than that, you are getting a company with a very strong revenue growth, balanced, balance sheet, which is very, very strong, and a very profitable bottom line. I think these three outcomes in conjunction is what our focus is going forward, given that CapEx varies from type and kind of projects that we win. So that is where our focus is and will continue to be going forward.
All right, so that's Kalpataru Projects. Quite bullish when it comes to their H2 numbers and expectations, which they've guided for. Dharmesh, let me come to you on this one. Power play, obviously. What do you prefer? We had two companies declaring numbers, KEC International, Kalpataru Projects, back to back. Between these two or any other ways to play power?
Yeah, yes, I mean, all the power generators, distributors, and ancillary equipment suppliers to power sector, I think they all have been of ready price. Though the structure story remains intact, there is no denial of that fact. But I think the best option to play them is to find valuation comfort. And power finances are the one where I find good amount of valuation comfort even in the current scenario.